Cherrywood Limited. Remember, this is an associate. We have identified our at acquisition date as 1 January 2017, guys. We are able to identify this throughout the section. They've indicated to us that they have purchased 35% interest for 210,000, and they've transferred equipment with a value of carrying amount of 99,000 and a fair value of 126,500, right? And they've indicated to us that there's lawyers' fees of 11,000. Okay, so guys, please think about this one with me. If you look at the separate financials of Timber Group, Timber Group will debit the investment, credit bank with the 210,000, credit bank with the lawyer's fees of 11,000, and credit the equipment. But this equipment we need to include at fair value. Therefore, this 126,500, right? 126,500. Therefore, debiting the investment with an amount of 347,500, and this is the cost of this investment. Remember, when you look at the additional information they indicate to us, I think it was number 1. Yes. It is the accounting policy of Timber Group Limited to account for the investments in subsidiaries and associates at cost. Therefore, in the separate records, this is at cost. Okay? Therefore, 347,500. Okay? Guys, just quickly park this fair value adjustment in terms of the equipment. I am going to get back to this just now. They provide us with our at acquisition date equity, and this is 1236916. Remember, we've identified that this is important to us because we need to determine what is the net value that will be incorporated into our group based on our equity method. Right, guys? Therefore, this is the 1236916 times 35%. And based on our equity method in our group, the value of the investment should be the 432,921 at acquisition date. Therefore, we are able to identify that there is a gain on bargain purchase if you compare these two amounts of 85421. Therefore, in our group, we will have to debit the investment and credit gain on bargain purchase. Okay. Now, guys, this is my calculation number 4. I have included analysis of owner's equity. Remember, you do not have to do this. I want to indicate to you because there's so many students that struggle with equity method, net investment. Okay, when you look at the analysis of owner's equity at acquisition, the 432,921, this is what we have calculated. Remember the consideration, we have determined this based on the information provided. It's the 210,000 plus the 11,000 plus the fair value of the asset, which is the 126,500. Okay. And we have determined that there is a gain on bargain purchase and our investment value is 432,921. Now this is the value at acquisition. When you look at my timeline, at acquisition date. Okay. Now, if you think about our IS 28 principles, remember our journal entry. For this period here, guys, the since period, we will have to debit the investment and the associate. We will have to credit what, guys? Retained earnings in terms of the associate. Okay. Then for our current year, which is 2019, Remember, our investment will increase. Therefore, debit the investment in the associate with the profit or loss portion, with the OCI portion, and credit in our profit or loss, the profit or loss in terms of our associate. Remember, this is the amount that will be presented in your profit and loss statement as a line item. Okay. Right, guys, you're still with me on this one. Therefore, when we look at the trial balance provided to us, you will remember that they have indicated to us, in terms of Cherry Wood, we have retained earnings of 1044,671. Therefore, on our timeline, our retained earnings is 1044. Let me just get this, guys. 1044,671. Our retained earnings at acquisition date was 861476. Therefore, the movement will now be recognized in our total column, 183195. Times this by 35%, and our investment will increase with a 64118. Guys, similar principle in terms of our current year. In our current year, we have profit. When we look at the scenario, we have a profit after tax of 490,380. We have gain on revaluation of land of 308,000. Therefore, if we include this, remember, we will have to include an increase, 490,380, 308,000, and our investment in associate will increase. Remember, our dividends will decrease the investment. When we look at the scenario provided to us, guys, 192,500, we will include this because this will decrease our investment. Guys, look at the difference, associate versus subsidiary. This will decrease our investment. 192,500, decrease the investment. Therefore, before taking into account any of our intra-group transactions, we have an investment value being the 432,921 plus 276,176. Right, now we need to look at this fair value adjustment in terms of the equipment being transferred. The carrying amount is the 99,000. The fair value is the 126,500. Therefore, guys, do you agree with me? If you think about this, if we transfer this equipment from the investor to the associate, remember, we need to include the percentage owned in terms of assets and liabilities of our associate into our group. Therefore, in our group, guys, when we add this, we have unrealized profit. Okay, guys, we have unrealized profit. Therefore, in terms of our investment, guys, this investment, we need to take out the unrealized profit. If we need to take this out, it's the difference between the 126,500 minus 99,000. Remember, only the percentage times 35%. And this is an amount of 9625. We need to take out unrealized profit. Okay, guys? Then when you look at our timeline, there is 6 months up until 20.17 year end, then 12 months, and then another 12 months, which this unrealized profit, guys, similar principle that we did look at in terms of our parent and our subsidiary. The only difference is now the percentage. Therefore, we now need to realize this 9625, divide this by the remaining useful life being 3 years, times 6 over 12 months. First 6 months up until 20.17 year end. And then the 9625 divided by 3 times 2 years relating to 20.18 and 20.19. Right? Therefore, this now realize. And if this realized, this will now be taken into account. Right, then we need to take into account our after-tax amount. Therefore, I will make use of the 9625. I'll deduct the 8022, and that amount I will times by 0.74. And I will have to decrease my net asset value with an amount of 1155. Okay, right, we can now move on to our intra-group transaction between our associate and our investor. You'll remember they've indicated to us during the current financial year, Cherrywood Limited, which is the associate, sold inventory to Timber Group at a gross profit percentage of 25%. Therefore, our profit is 25% on the selling price. Included in Timber Group's inventory on hand on 30 June 20.19 is inventory amounting to 143,000 in respect of purchases from Cherrywood. Right, guys, again, you do not have to include the separate journal entries. I do this to explain to you the scenario. This is calculation 5. We have Cherrywood, our associate. Remember, in terms of our associate, we will have a line item on our statement of financial position, which is investment in associate. And we will have in our profit and loss a line item, profit or loss, in terms of the associate. And our associate sold to the investor, right? Therefore, when you look at the separate records of our associate will have to debit bank, credit sales, debit cost of sales, credit inventory. Therefore, do you agree with me when we look at this? The profit will be included in the profit or loss of our associate, right? In the separate records of our investor will debit inventory and credit bank. Okay, now in terms of our records of our investor, remember our investor will recognize the investment in associate line item and then the profit or loss in terms of our associate. But included in that profit or loss in terms of the associate is unrealized profit. This is profit that we cannot recognize due to the fact that this is the same group. Timber Group cannot recognize profit to itself, right, guys? Therefore, from a group perspective, we need to take out that unrealized profit. Okay, we need to decrease our inventory. Remember the inventory that is included in terms of the debit inventory section of Timber Group. We need to decrease this, therefore we need to credit our inventory and we need to decrease the profit. Decrease the profit in terms of the associate. And this is the 143,000 times 25% times 35%. Remember, associate, therefore, times the 35%. Right? And this is an amount of 12513. 12513. Now, if the profit decrease, the tax will decrease. Therefore, we need to decrease the profit with the tax portion. Remember, the after-tax portion will be included in our investment. Therefore, 12513 times 0.72. And this will be 9009. Right, guys, therefore this is the amount that we need to decrease our investment with. And this is our calculation 5. We're going to transfer this. We need to decrease our investment with a 9009. And our net investment in associate will be 698933. And this we now need to transfer to the face of our statement of financial position. Therefore, we have our investment in associate. This is our calculation 4, and this is 698933. Remember, guys, you can also include this in your additional column if you want to, your calculations. 698933. Right, now let's refer back to our scenario and we can tick off our intra-group transaction. Timber transport, remember this relates to our part C of the requirement, and we now need to identify all of our assets amounts and transfer this to our face of our statement of financial position. Right, therefore when we look at this, timber group 2400 and 1.9 in terms of Oaky Woody. We're not going to include cherry wood. Why not? Because we include a line item investment in associate. Investment in equity instruments, timber wood and Oaky Woody. Now let's transfer these two line items. When you look at the line item property, plant and equipment, in the parent column, I have transferred my 2.4 million. In the subsidiary column, the 1.9 million. When you look at the line item investment in equity instruments, I've transferred the 5.3 million and the 612,640. Right, now we are able to transfer our trade receivables and our inventory. Let's refer to our scenario. When we look at this, guys, our trade receivables, 719,510,328, and our inventory 755,640 and 704,480. When you look at our line item trade receivables, the parent column 719,560, I've included the subsidiaries amount. The inventory line item, the parent column 755, and I've included the subsidiary 704,480. Right, now when we look at our trial balance, we still need to transfer our cash and cash equivalents, 229072 and 126824. I have transferred my cash and cash equivalents. When you look at the line item, parent column 229072 126824. Now what is my next step? I now need to identify if there is any additional amounts that I need to include to be able to complete my calculation. And this is why I have my additional columns, right? Okay, now guys, to be able to do this, you need to briefly work through all your, or scan, not technically work, but scan through all of your calculations. Therefore, let's have a look at calculation 1, the analysis of owner's equity of Oaky Woody. You will remember at acquisition date, we have recognized a decrease of 58,000 in terms of our inventory. They've indicated to us that we have a deferred tax liability, therefore we can ignore the deferred tax. We now need to decrease our inventory. When you look at our line item in terms of inventory, the inventory has to decrease with the 58,000. Then, in our analysis of owner's equity, we've also reminded ourselves that they have sold 60%. Therefore, we need to add back the 60% that they have sold. Therefore, decrease with the 58,000 and then add back the 58,000 times the 60%. Right? Then, when we refer back to our analysis of owner's equity, our next line item, the intangible asset that we have recognized, very important one, guys, this intangible asset. Therefore, in our statement of financial position, we still have to include our intangible asset. But what do we need to remember in terms of the intangible asset? That we have amortization. Remember, we have indicated to ourselves a reminder, amortize the asset. The asset increased with it 250,000, and you will remember that the useful life provided to us was 5 years, and from date of acquisition, which is 1 September, 10 months. Therefore, our intangible asset will increase, therefore plus the 250,000 minus the amortization, 250 divided by 5 times 10 over 12. Right? Therefore, when you look at this next line item, our indemnification asset, which we have already transferred to the face of our statement of financial position, 69750. Okay, therefore, if we look at the analysis of owner's equity, we have transferred all of our assets that we need to include. Next, our calculation number 2, intra-group transaction. You'll remember that this was inventory, parent sold to Okie Woody. Therefore, when you look at our journal entry, we have identified, guys, that our inventory has to decrease with a 24760. Let's ensure that we have transferred this. When you look at our inventory line item, yes, 24760. We have transferred this, and we have transferred the trade receivables. Right, therefore we have transferred this journal. Calculation 3. Calculation 3 relates to equipment. Yes, guys, remember 3.1 and 3.2. If we look at the face of our statement of financial position, 3.1 and 3.2. Right, now our associate. Okay, guys, remember when you look at our calculations in terms of our associate, this section here, this section relates to the adjustment in terms of the equipment that our investor used to pay. You with me? Okay? Therefore, guys, this relates to the adjustment in terms of the payment section, and we have eliminated the 35%. Okay, now when we look at calculation 5, we have to credit our inventory with a 12513. Therefore, our inventory will decrease. And I'm going to call this 5.1 in my statement of financial position. When I look at my inventory line item, minus 12513, and this is calculation 5.1. Right, guys? Therefore, we have now transferred all of the relevant details to our template, and we can now focus and include our total. Okay, but guys, just one last thing before we do this. Let's say, for example, that you are running out of time. Guys, listen. I won't even use my calculator then. I will look at the totals and I will include, let's say, property, plant and equipment, 360022, right? Let's say investment in equity, I'm looking at this, let's say 1200. You see, this does not even add up. No, it doesn't, because I'm running out of time. Guys, only if you are running out of time. Remember, you are going to get marks for your calculations. Therefore, first, your marker will look at the total. If your total is incorrect, your marker will want to identify about how did you calculate this, and then look at all of the differences. Therefore, then you will receive your marks here in terms of your calculations. You with me? Okay. Therefore, if you do not have time to include proper totals, briefly include anything, because this is what your marker is going to mark. If you do not transfer calculations, your marker is not going to mark your calculations. And I have included my totals. Therefore, guys, very important. I've indicated to you, if you're not going to transfer your calculations, they're not going to mark your calculations. What do I mean with transferring my calculations? This here is transferring calculations and then indicating where did I calculate these amounts. Okay, let's move on to part B.